Welcome back to the channel, everyone. If you're new here, my name's Kai, and every month I unpack and dissect my stock market portfolio across my two different accounts, one on Trading 212 and one on Freetrade. To take it back slightly, I've been investing for just under 2 years and I've been documenting everything on this channel, whether I'm up for the month, whether I'm down for the month, my good decisions, bad decisions, all the highs and lows that come with investing. So we show you, and I be transparent with what I'm doing and what I'm planning to do next. Now, to be clear, this is not financial advice, and everything that I am showing you in this video is on my decision, and I'm just showing you my journey. So capital is always at risk when you're investing, and that's something to always keep in mind. Now, in today's video, we're going to be talking about the current state of the market since my last video. We're going to be talking about my current investing portfolio, unpacking and showing you guys exactly what I've invested in and if I have made some new investments for this month. And we're going to be doing some live investing at the end, so I'm putting my money where my mouth is. Now, since the last video, we had the president of the US, Trump, and the president of China, Xi Jinping, meet up in South Korea to essentially discuss trade. Now, before going into that meeting, Trump had insane tariffs already imposed on China and threatened to increase that percentage. Now, my thoughts going into that was Trump was using tariffs as essentially a negotiation tool to collaborate and essentially get a deal from China. Now, I presume a lot of these conversations were about Chinese minerals and rare earths that are being potentially exported to the US, and from the flip side, the US exporting hardware and AI and semiconductors, all tools needed to create AI and machine learning products. Now, this is very important for both sides. Firstly, given both countries are competing with each other in the AI race, and a lot of these minerals and a lot of these hardware components are needed to create AI and machine learning programs. And from a defense perspective, you need rare earths and minerals to be able to build ships and, you know, everything like that, etc. In a nutshell, Trump did decrease tariffs on China, but he did increase them on their neighbor Canada, which I thought was quite interesting. And you're probably thinking, Kai, why is this so important if you're just invested in particular stocks overseas in the US? But you have to think about it from a company perspective, right? All of these deals will affect the imports and the exports of, firstly, the companies that you're potentially invested in, as well as the ability to sell products globally as well. So if you're thinking about companies like Microsoft and their distribution, you want deals to happen, especially within emerging markets and spaces, so that the whole ecosystem will grow and Microsoft, for example, can sell more goods and services. Now, just drawing your attention over to the rate of return, which is sitting just under 70%. This is essentially accumulating my deposits and accounting for my deposits as well that I've put into my portfolio. And right now the figure is positive because we have seen some growth within the portfolio. If it was negative, for example, we would see a minus rate of return. Now, my largest holding by far is the S&P 500 with just over 18k in there. Now, something important to note is that my dividends are distributed into my account, which basically means the cadence where I receive dividends, which I believe is every, twice a year, I think. That percentage of money will just be distributed into my account. So it's not accumulating, it's not automatically invested. The reason I do that is because maybe I want to take that money and put it into a stock or a different ETF, for example. Most of the time, I just end up reinvesting it back into the S&P. So again, you can get the distributing one or you can get the accumulating fund, but no real difference on that perspective. Now, as we can see, we have seen a slight pullback in the S&P. A lot of this is to do with fear that we are in an AI bubble at the moment and that valuations are essentially being mispriced. On the flip side, European markets have seen a positive as we're seeing fairer valuations within specific companies here based in Europe. So we're seeing maybe some rebalancing. Again, this is a very, very short perspective to look at it, but this is what's currently happening, you could say, at the moment. Now, what's fueling this, even though we are within invested within 500 diversified companies. What's mainly fueling this growth is the likes of Nvidia, it's the likes of Microsoft, it's the likes of Google, for example. So very, very select few companies are really driving the markets upwards from that perspective. So although we're technically diversified, you could argue that we're not so much, just due to the weighting and the growth that we're seeing within so few companies. Scrolling down, we have Alibaba, again a good company in my opinion, but there is a level of risk that comes with a company like Alibaba due to the US and the China AI race, and still tensions there, although they have come to a slight trade agreement. This is a volatile stock, but one that I have invested in at a very good price and something that I'm holding, so I'm not going to be adding to this company in the foreseeable future essentially. Now moving on to Amazon, we have 34 shares within this company, and it's a company that I bought in when we saw a massive pullback back in April when Trump was going on a mad one with tariffs on every country, even their allies. That's when I got involved in Amazon, and it's a stock that I am just holding at the minute. I'm not going to be adding to it just yet, but we have seen some nice gains in this stock. Right now we have seen a slight pullback, but that could be due to the whole overvaluation of certain companies or some profit taking as well. Now we also have our All World ETF with just over 44 shares, and this is essentially invested into different companies globally. So we have companies invested in the US, companies invested in Asia, companies invested in within Europe as well. But although it's on paper it's an All World ETF, it is very, very weighted towards US equities, right? So that's why we're seeing this growth here. Even if we look at it side by side from the S&P, we can see clearly it's very, very, very similar. So that's something you could argue there, but they do get weighted as well, and they can be recalibrated, right? But smaller position relative to what I've invested in. Now the last one of my ETFs is an ETF focused on emerging markets, so mainly companies based out of APAC, and we have seen some nice gains within this ETF, but I haven't added to it in a while, and that's mainly because I've got positions in the S&P and obviously positions in the All World, so I'm not going to add to this anytime soon as well. Now logging on to Freetrade, we currently have 3 positions here: Google, Microsoft and Meta, and this is actually a general investing account. Now a few years back I opened up one of these. I didn't really know too much about ISAs, and that's the reason I make these videos, is so you guys can essentially avoid the mistakes that I made in the past, right? Now looking at Google, it's a stock that if I scroll down I actually bought back in 2023, so just over 2 years ago, and it's one that I've held ever since. I haven't added to it apart from the position that you saw on my Trading 212 account. I am keeping this position looking at Google relative to other companies in the S&P. You could argue that it is still undervalued, so a great position here, and I've just held it through the peaks and the troughs. Microsoft as well, similar. I bought this company back in 2023 as well, if it wants to load up. Bought it on the same day, £500, and we've seen great gains in Microsoft too, and it's a company that I've just held, haven't added to positions, and as I wanted to focus on my larger ETFs and buying companies like Amazon as well. But nevertheless, still great to have those companies in the portfolio, and we have a very small position here in Meta. Now, like we do every single month, we do some live investing, which I am going to be investing into my S&P 500 and my All World ETF. Now this was a position which I actually technically have increased my holding into the S&P, as normally I split them exactly down the middle, 750 each, but I wanted to have a little bit more exposure to the S&P this month, as I'll likely slightly stop or pause on my investing into my All World, just because the weighting is very, very similar. I'd rather just have it all in the US, but that could always change just given the research and the change that happens within markets. Now if you've enjoyed this video, guys, you're probably going to enjoy the next video on screen here, as we'll dive into a little bit deeper to broaden out what I've been looking at so far this month. If you enjoyed, again, please like and subscribe. See you on the next one.